Damn, what's goody? We're back. Moneypreneurs episode 3. Episode 3, episode 2.5, episode 2. I don't know. I don't remember. I gotta go and see. Whatever it is. Episode 2. Bam. There it is. Hopefully it popped up on the screen. It may have not popped up on the screen. I don't know. I'm not editing the videos. I don't even know if there is any edits on this video. But let's get into it. I have my little notes right here. Today we're going over daily bias. We're about to explain what it is, how I find it, how I execute off of it. I can't read this, or when to execute off of it. I have my top monitor up here, but let's get straight into it. Daily bias. So a lot of you guys have been requesting this video. Yes, I do already have a video out on daily bias. This is a more new and remastered video and how I've actually improved from finding my daily bias before. Let's get straight into it. Daily bias. How to locate daily bias. What is daily bias and why is it important? I will emphasize this for you guys who do not understand daily bias. Daily bias is one of, if not the most important things within trading. If your daily bias, and listen to this, if your daily bias is incorrect, your trades will either, and I've said this before, and a whole million other YouTubers have said this before, if your daily bias is incorrect, your trade will either be very, very short-lived, or your trade will always be invalidated due to your daily bias being incorrect. You're trading against trend. A lot of you guys may just look at trend overall like this and be like, and probably draw a channel, bam, bam. This is what I did in my first video. If you want to watch that video, link in the description too. I don't know if it's a good video. I'm gonna be honest, I haven't watched my own Moneypreneur series. I don't know if that's good. The feedback was good, but I don't know if it was good. Anyway, a lot of you may just draw a channel like that and be like, we're bullish, we're good. Yes, but you have to remember there's certain days where we won't be bullish all the time. For example, Thursday and Friday, we were bearish. We closed essentially bearish. So how could we have caught these bearish moves to the downside, and how could we have caught these bullish moves, which we did catch throughout the week, and even on days like this, halted, have taken a step back and allowed price action to develop in order to continue trading? Because there's certain days where daily bias simply tells you, do not trade. Don't trade on certain days. So bam, let's start with the basics. When price is rallying, that's the easiest to determine. It'd be funny if I went in replay mode and I got daily bias incorrect. That would be funny. Actually, I don't like that. We'll go into a random point in chart. Overall, what do we see? Well, weekly, we are what? Bam, bullish. We can tell that. How can we tell? Well, we're going up, okay? We're going up. Here we see we retrace for one of our few retracement tools for value gap right there. Bam. Rejected off of that. Now we're pushing to the upside. There's times with daily bias where you need to wait until the daily structure close in order to be able to get a better understanding or a full clear picture understanding of what price action is trying to do. Right here we see this is the overall break of structure to the upside once this high gets taken out. But this high right here did get taken out. Right here, we did break this daily structure to the upside. So the question is, based upon your trading plan, when do you want to execute? Do you want to execute on the overall break of structure to the upside, or simply the break of structure? And I'm emphasizing this because each one gives a certain level of confluence within the trade and probability level. This one, yes, it's still very, very high probability. Yeah, okay, you broke daily structure to the upside, you have a very high chance of continuing to push higher. But with the overall break of structure, and I'm emphasizing this, why? Because we failed to break structure to the upside for around, in this example, 69 days. So now, what are you waiting for? What would you want to see if I were you guys? I would want to see the overall break of structure to the upside. But that's if I were you guys. I'm me, so I would execute on this, which most likely would result in me doing something incorrect. That was a joke. That was not a joke. But anyway, with that being said, this was the daily breaker structure to the upside. Now you see we continue pushing to the upside, breaking overall structure to the upside, giving you that extra confidence. Okay, we're bullish, we're ready to go. On this day, it sets it up. On these days where it's chopping and consolidating, those are the days where you stay away. Okay, really? That ruined our entire example. We got it, chat, don't worry. Bam. Got it right here. But you can see from there we continue to rally higher. Why? Because we broke overall structure to the upside. You have to know the difference between simply just a regular break of structure to the upside and overall break of structure to the upside. I think some ICT people would call this a change of character. CHOCH. I have another word for it, but I can't say it on YouTube. But you guys in the Discord know. It's called pause. Anyway, you see over here we rallied, continuing to the upside. Dang, we really rallied. But my point continues, even right here. Bam, break of structure to the upside. Continues to give you that bullish confluence, knowing you're going higher. Here, same thing. This is what you need to focus on. And for the days where, for the people that are like Lonnie, but what about the days where, you know, you're chopping, chilling like this? Let's go into that. Because certain days like that, I stay away from trading. For example, this day right here, what day was this? Wednesday. I stayed away from trading. Why? Because yes, we broke daily structure to the upside here, but I wanted that extra confluence. Remember, this is based upon your trading strategy in order to fully know, okay, we're going to continue higher. And for retracement days, 100%, if you guys want to trade retracements, you can. And if you guys don't know how to trade your retracements going into daily bias, if you're trading into retracements, I don't personally recommend it. But if it's part of your trading plan and you want to trade every single day, fine. But with that being said, how you do trade into retracements with daily pushing bearish, you go on 4 hour, you go on 1 hour, you look to execute on these time frames. For example, this was a retracement into a daily fair value gap. We've seen that. Bam, you could have played the hourly structure to the downside. You could have played the fair value gap retracement to the downside. You could what else do we have? Equilibrium to the downside. Bam. And that's not a 50% mark, but order block retracement. Bam. You have so many confluences in order to play the retracement into the downside, right? And possibly to and to play the retracement back to the upside. Remember, overall daily fair value gap or within. Here, price starts pushing to the upside, break structure here. Okay, what are you looking for? You're looking, to scale down to whatever time frame you execute on, and execute on your A+ setup. For me, it's liquidity, so you break a structure. Here, I would wait for lows to get taken out. Bam, lows to get taken out. Okay, what do we need to see next? Bam, break a structure to the upside. Bam, bam, and yes, I'm gonna label everything for you guys because I'm fly like that. Bam. Bam. And then we got the overall order block here. Bam. You're welcome. Anywho, and then once I see my liquidity break of structure, I'm good to enter. Why? Because I'm following overall daily bias. I have an understanding of, okay, where does price action want to go for the day? So I'm not trading against trend. You want to trade with trend. Remember that. Trading with daily bias is that. So, essence, when do I step away from the charts? On the days where daily bias is consolidating. And note, I'll use a great example on Friday or on Thursday within the Discord. I was testing out something out with fair value gaps, and I was explaining how I wanted to be more patient with certain setups. And here we came up and took out these daily highs. Thursday, we were bearish, but I didn't execute. That's just because I made the choice not to execute that day. Here we came up. Some people, ICT traders would call this a market maker sell model. I don't know what that is, or turtle soup. I'm not making this stuff up. Or a mother-daughter chart pattern, or a Bitcoin dinosaur, or a, I don't know, sun and moon Pokemon Go. I don't know. I don't trade ICT. But the point is this. 4 hour came up, took out these highs, then broke structure to the downside. Here we've seen the retracement. On a day like this, where you do see 4 hour and 1 hour take out highs, definitely didn't take out 1 hour highs, but overall daily and 4 hour highs, and break structure to the downside, take out these highs, liquidity sweep, break structure to the downside. That is when, okay, you could see that market structure shift, right? Those are days where you can execute with, okay, overall daily bias, where, let me find it, we are going up. But this specific day, we have possibility of being bearish. Measure out your possibility on the day with daily bias. You want to make sure you're following within overall trend and within overall price action on that day. Just because overall trend is bullish does not mean you won't have times just like this where you retrace and have opportunities to take sells to the downside and or to the upside with whatever pair you trade. So, and yes, I'm keeping the notepad because I want to stay on track. So, bam, we have the daily bias checked off. We have to explain the importance of it. That's how I find it. So I find it by going in, and personally me, I use macro retracement tools. I use fair value gaps. I use break of structure. I use liquidity. I do sometimes use order blocks. You 100% can if you like. Go in, figure out what retracement tools work for you, and figure out, okay, when backtesting, what do I prefer more? How am I able to find daily bias easier? And what allows me to execute off of it? For example, on a day like this, where we do retrace, and I know I don't have to do this, but I'm gonna do it anyways, until fair value gaps such as this. On 4 hour, these are days where I don't trade. I stay away from the market. Why am I emphasizing this day? Because not only is this a daily retracement, but this is a weekly retracement as well, right here. So on days such as those, I stay away from the market and I let price action play out. You have to know with daily bias when to stay away from the market. I'm going to always emphasize that, because you don't want to trade unless you understand daily bias. I'm going to say this again, and hopefully my editor makes a YouTube short out of this. You do not want to trade unless you understand daily bias. That is the most important thing. Why? Because daily bias is the backbone of our trading. If your daily bias is not on point, your trades will either be very, very, very short-lived, and or you will get stopped out majority of the time. Why? Because you're trading against trend. Papi, senor, we need to trade with trend. You're here to trade with trend, so let's trade with trend. Let's follow overall price action. Let's get it done. Let's hit some TPs, baby. Let's hit some TPs. Let's make some money. Let's live life. Let's chill, baby. Anyway, back to the notes. And that is how I execute off of it. Scaling down in time frames, 4 hour, 1 hour, 15, 5, making sure that all the other time frames are aligned, giving me confluence with overall daily bias, and that is when I choose to execute on my liquidity sweeps and breaks of structure. So I'll give one example right here, if we can find one within a few seconds. Yes, we can. Okay, good. Bam, fair value gap right here, 4 hour time frame. 1 hour, scale down. What do we see? Okay, we see 1 hour came down, took out these lows, broke structure to the upside. Bam. Liquidity. Bam. Resting below those lows. We have even micro 1 hour fair value gap right there. I don't need to plot it out. 1 hour broke overall structures to the upside. Bam. Break a structure. 15-minute. Let's go in. Let's see what happened. This is market open. I can tell. Why does I trade market open? Bam. What do we have? Retracement for this 15-minute fair value gap. Bam. It's just scaling down, baby. 15-minute fair value gap. 5-minute. What do we have? 5-minute break of structure to the upside. Cool. And 5-minute retracement. Break structure to the upside. Bam. Let's say you execute on 1 minute, like me. Let's find this real quick. Going fast. Super Saiyan. Bam. Retracement, this is a 5-minute fair value gap and a 1 minute fair value gap. I don't execute off of 1 minute fair value gaps really, not often, but anyway, price action, bam, break structure to the upside here. Why am I emphasizing this? Because we took out this micro high and retrace for this 1 minute fair value gap. It's just scaling down, boys. Don't overcomplicate it. Bam, execute here. Actually execute on one of these two breaks of structure. Doesn't really matter since I emphasize the point right here. Bam. And then, I don't know, target whatever macro highs, or if you actually want to like take the trade properly and not have a sell such as I do, go in and do something like this. We lost a trade. We lost a trade, boys. And then you could go in and target macro highs. Do whatever you want. Bam. There you go. That's how I execute off of it. And that is daily bias. So if you guys enjoy, like the video, daily bias. Next episode, I'm thinking, what should we do? Comment down below. I have ideas and I know exactly what we're gonna do. I just want to see, more video recommendations. But apart from that, I love you guys. Thank you for watching the video. I'll see you in the next one. Peace. Love you. Bye.